And I'll go through what I think are some of the highlights that I think you guys really need to know about. But again, please ask me any questions, because that will, I could go on all day and it could be something that you're not interested in. So let me know. But really, from the basics of budgeting to the truth about credit, which I really would encourage each and every one of you to take, it's really the meat and potatoes around credit ratings and reports and scores and dissecting all that language, because it's confusing. 100%. And what do you really need to worry about? And some people are so obsessed with their credit score, and I can explain how that's different from a credit rating. And yes, it's something to be conscious of, but not twisting yourself. There are behaviors that will influence it more than you trying to engineer it to be right. So that's a really important one for starting out, and constant reminder to get down to the basics when it comes to credit. There are a lot of myths and practices. Maybe you were told by your banker, or maybe you just heard, or you watched your family do, or whatever those are. And then things about planning a vacation on a budget, smart and savvy ways to save, 65 side hustles. We talk about all those different things that you could possibly do. There are a million. We've got a 3-parter, the psychology of money. So it's the psychology of spending, of saving, and how tech is influencing some of your purchasing. So we're really getting less about the mechanics and more into the behavioral economics of the whole thing, and why we spend the way we do, and why we impulse shop, how to beware of scams and frauds and all those pieces. So we try and meet people at all ages and stages.
So we hear a lot of people our age talk about not being able to afford things, and then the pros and cons of taking on student versus credit card debt. Can you elaborate a little bit on the difference between the two and what's maybe wiser to incur?
So good credit is using someone else. So credit in and of itself is using someone else's money with a promise to pay it back, typically with interest. So good credit is when you use that money for something that's going to benefit you more than the cost of borrowing. So presumably your education, without an education, your income level is here. With a degree, your income level can be here. So that difference, the cost of borrowing, is far outweighed by the long-term potential of having a degree or a diploma or whatever the qualification is. Bad credit is the stuff where it's costing you a lot of money and you've got nothing to show for it. So again, good credit could be like taking a mortgage, because presumably the value of the house will increase, or the property will increase enough over time that it more than covers your cost of having paid for it for 20 years. So there's student credit when it's used for the right things. It depends. When you say taking it on, what are you using it for? Are you using it to actually pay for tuition and books and rent while you're in school, or are you using it to go to Cancun for spring break? Now, like on like, even if you were using it to go to Cancun, having the plan for paying it back is what really matters. And the cost of it's going to be different. The cost of student debt is lower inherently than credit card debt. So using something like a student line of credit, it's great while you're in school because you don't really have to make payments. But then at the end, it gets lumped and you've got this payment, but your interest rate's going to be higher than the student debt. So keeping in mind what you're using credit for. So using credit cards for things like groceries or drinks or whatever it is, where it's gone and you've got no asset to show for it, that's the kind of thing where cash is king, trying to use. Doesn't mean you don't use a credit card, but don't use it if you don't have a plan for being able to pay for it in full. And that's the thing with, thanks, Nicholas. Yeah. With student debt, it's one thing to take it on, but it's also knowing that does need to be repaid, and you are just starting out in life and you want to try and get rid of that as quickly as you can. So making sure you've got some plans, and there are ways to do that.
What is your view on the increasingly common buy now, pay later options when online shopping? So now that they've done those pay in 3 equal or X amount in equal payments over 3 months directly to the vendor, do they impact your credit rating? And are you seeing more people going into the hole from them? Or do you view it as a better alternative to credit cards?
It comes down to, again, having a plan. So, if you don't have the money right away and you're getting paid in a month or in a few weeks, yeah, that's a way to avoid paying interest on a credit card. But you're going to pay interest. Like if you miss your credit card payment or you miss this, you're going to be paying interest. So without a plan and knowing exactly, and it's really tempting, right? Like, oh, it worked for these boots, it's going to work for something else. And you can get, depending how organized or disorganized you are, you could end up with 3 or 4 or 8 payments and just be juggling. So, how big a thing are you buying that you couldn't wait the 3 weeks? Like save up. Typically it's 3 payments after. Again, you're putting a little down now and then you're paying over a period of time. How badly do you need that dongle or whatever else is happening that you couldn't save up for it ahead of time? But having a plan and being organized, I don't love them. In terms of, I think they're very tempting, and I think it's too easy to get mixed up.
How do we make it more comfortable to talk about money so we can share more knowledge?
It's so interesting because you're all logical human beings, and money is a means of exchange. It could be the paper or the plastic and coin that we use. And I love that plastic stuff because when it goes through the wash, nothing happens. It could be, whatever it is. It could be beads, it could be trinkets, whatever it is. It's just a means of exchange. But there's so much emotion wrapped up in it. There's and not great ones, right? There's ego and there's shame and there's embarrassment and a bit of pride. There are all those things. I'm pleased to say I have noticed a real difference. I mean, having these conversations, again, you don't need to divulge your bank balance to anybody or your salary, although quite honestly, I think it's a good, healthy discussion to know, if you're comfortable letting people know where you're at. So everybody's on par, especially women. But yeah, just saying, oh my gosh, you know what? I got this great deal, or I just tried this thing. Just sharing all those tips and tricks, I think normalizes the conversation. And it's nobody's business whether that extra $20 makes a difference between you making rent or not, or it's just great because you loved saving $20. So there's so many great ways we can help each other out. If you share study notes, you share job leads, you share a lot of your life online, why wouldn't you share about money? And there are some great bloggers and people online. There's some great voices to learn from that I really respect and have a great perspective on what's happening these days and what challenges you guys are facing.
Speaking of challenges faced by young people, could you clarify for us what it means to be house poor?
There are assets and there are liabilities. So there are things you own and things you owe. And then there's cash, right? There's readily what's available to you. So someone who's house poor may have maybe they bought a condo and so much of their income is going, so it looks great, right? Like they've got it together, they've got a great job and they've got this great place, but all their money is going to keeping the lights on and the roof over their head, and they have no other cash. There used to be this nice, I mean, it still exists, but it's not, this nice little pie chart about what you should be spending for what. And even when you go to qualify for a mortgage, the parameter is not spending more than around 37% of your income on your house, on your housing. Well, Who's in Toronto? Yeah, Nicholas, what are you spending on rent? But like, it's certainly more than historically 25%, and then they've upped it and upped it. Realistically, housing costs a lot, but it's when you just are so tight that it may seem like a great deal, but you just can't enjoy your life with it.
If you mentioned earlier that you wish you could explain the difference between a credit score and a credit rating, and that it's not all about your credit score.
Very quickly. So again, Equifax and TransUnion. And I will tell you, you can go online to both Equifax and TransUnion. You can request your own credit reports from each of them once every 12 months for free. And you should do it starting now, because presumably your reports will be pretty short. It's your responsibility to make sure everything is accurate. They have a remediation process that's very easy online. But if you go online, you get the reports immediately. Check them on your birthday. That's your birthday present to yourself. Order them every 12 months or 6 months. You can stagger them just to make sure everything's up to date and accurate and nobody's messing around with your identity. That's a whole different chat we can have another day. So on those reports, it's almost like your resume with money. And borrowing. So your resume for work has your name and your address, your identifiers, or your email, and your experience, your professional experience. So a new employer can assume what you know, and get to know you a little bit. A credit report is for a creditor, so a credit card company, or if you want to take out a car loan, or a landlord, and sometimes an employer, depending what your job is, will take a look and see how responsible you've been in the past borrowing money. And so on there will be a few different details, including credit ratings. So you're rated from 1 to 9. There's a 0 if it's a brand new card, but after 6-8 months of dating, they can render an opinion. So you're scored from 1 to 9, and you want to be a 1. 1 means you're paying your bills on time. It might just be that minimum payment, but you're meeting your obligations. If you're late a couple of times in the year, you'll slip to a 2. And the later you are, the higher that number will be. And 9 means it's a bad debt. They've written it off. They don't expect to ever get paid. A credit score is, now you can obtain your credit score, but if it's from Equifax or TransUnion, you have to pay for it. It's about $20 all in with tax. There are ways to get it for free. Many of the financial institutions now will give it to you for free. In October 2019, I think, if you go to YouTube and just type in CBC Marketplace credit score, there's about a 20-minute video. Watch it, because it does the best summary of explaining. It's a bit of the Wild West, because the credit score you're going to get from Equifax is different than TransUnion, because they have different bases of information. The one you get from your bank or your credit union will be different than Equifax, because they have more information about you. It's a constantly moving situation. The majority of people, about 75% of people who are active credit users, have a 650 or better. And that's sort of the B+ of credit scores. It will get you through school. It will get you through, that's, when you go to a lender to get their normal, just basic published lending rates, you want a 650 or better. It's a very complicated algorithm in terms of how that score comes about. It's different for everyone. All you need to know is, if you picture a pie chart again, the 2 biggest pieces you're in control of. 35% is binary. Do you pay your bills on time? Yes? No? You're in control of that, right? So that's 35% of the equation. Another 30% is how much you're borrowing in relation to your resources.
If you could tell one person who's like fresh out of high school, about to dive into the world, and you could tell them one skill or maybe even one book that they should read about budgeting or money management, what would it be, real quick?
Really quickly right now, I would read Worry Free Money by Shannon Lee Simmons, followed up with The Wealthy Barber, which is really old school, but the stuff still sticks. It's good stuff. I would tracking your expenses. Just keep track of what's coming in and what's going out, and making sure that the coming in is bigger than the going out, and keeping organized, and honestly asking for help. There are so many resources online, on campus. Your friend, if you see somebody who has it, look, you see somebody who's got great new shoes, you're going to ask them where they got them, right? If you see somebody who feels or looks like they have it all together financially, ask them what they're doing.
So true. So true. Okay, well, I think we have run out of time for today. So thank you so much, everybody, for attending. Thank you for the great questions. And Anne, thank you for your time. We so appreciate this.
My absolute pleasure anytime. And you've got my email if any other questions.